maybe a bit of a controversial take here, but I think that the idea of preconfirmations right now, they're very important for interop, but looking at the actual behavior of users on chain right now, um, the main really unlock that I think AVSs will actually have is less so the view of having pre-confirmations at the general protocol layer, but rather at an application specific layer.
Hey everyone, this episode is brought to you by Sei, the blazing fast parallelized blockchain which is unlocking Solana-like performance for the vast ocean of ETH devs out there. Now, you're going to be hearing all about Sei and their new V2 upgrade, but if you take away one thing, the EVM is here to stay. There are some problems with it, which we're going to get into later in the episode, but Sei, and especially their V2 upgrade, is helping solve that. So thank you very much, Sei, for making this episode possible. Hey everyone, this episode is brought to you by Kinto, the safety-first L2, which is accelerating the transition to the on-chain financial system. They've got some very cool features like user-owned KYC and native account abstraction, which solves a bunch of the onboarding and bottleneck problems that many L2s suffer from. So you're going to be hearing all about them later in the program, but if you want to learn more and better, if you want to join their launch program, Engen, E-N-G-E-N, you can click the link at the bottom of this episode. Go check them out. Tell them I sent you.
All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone. Welcome back to another episode of Bell Curve, joined by my trusty co-host, Miles of Reverie. And today we've got Muto from Ethos and Ludwig, repeat guest from Sorella Labs. Gentlemen, welcome to the show.
Thank you for having us. It's great to be here.
Yeah, thank you. Good to be here.
Pumped, guys. This is going to be a really fun episode. We've spent some time in the restaking season talking a little bit about what we could call the supply side market dynamics. So that's everyone on the on the Ethereum side that's interested in seeking additional yield and what those dynamics are going to look like. What we wanted to talk to you guys about today is try to get a little bit more granular on the demand side of the market from the AVS perspective. So each of you guys have built on the AVS side of things, and we wanted to get into why you decided to be an AVS. And maybe, Ludwig, I could toss it over to you first. And maybe you could talk to us a little bit about what you're building at Sorella, the initial problem that you're trying to solve, and then why you thought restaking was the right solution for you.
Sure. So to give a bit of background on kind of how we came about what we're trying to build and why we decided to build it, we initially came into the market trying to optimize the entire industry of providing liquidity in AMMs. So we were aiming to build sophisticated systems to facilitate very efficient on-chain liquidity management for regular users, but also funds and larger institutional players. But what we kind of came to accept is that regardless of how smart you can be, and regardless of how informed you might think you are as a liquidity provider, the current implementation of AMMs just doesn't make it profitable. You cannot really achieve that level of profitability that would be desirable because you are constantly getting arbitraged and offering stale quotes. And how we see this exhibit itself in Ethereum is that you have these sophisticated builders and searchers that are consistently arbitraging the price of an AMM against a centralized exchange price because the centralized exchange price operates in a far faster capacity when the AMM is only going to update every single block. And so our baseline solution here is to create an auction system that pits these arbitrageurs against each other so that they can compete to purchase the right to execute that arbitrage against the pool. Similar to what you see in a block builder auction where we're all fighting against each other as builders to bid the most value back to the proposer. But here the value is not directed to a proposer, but rather directed back to the LPs that were suffering the economic loss in the first place. On top of that, we also aim to solve the sandwich problem by effectively batching all of the user orders that come after this arbitrageur so they can form a single uniform clearing price where they will all get the same price and the LPs will all clear at the same price so that there is no reordering mechanic that can exist where you can extract some value from those users.
All right, so Ludwig, maybe to say some of that back to you, it's like the initial problem that we're trying to solve here, solve for roughly is lever, right? There's LPs, especially on ETH-based dexes like Uniswap, are just losing an enormous amount because there's a 12-second block time and they're overpaying arbitrageurs to reset the price, right, to whatever the price of like ETH is on Binance, say, right? So that's the starting point of the problem. Part of the solution there is a batch auction type function, but in order for that to work, you need basically to select a quorum, right? You need to run an auction, and in order to do that, you need to select a quorum. And I feel like that's where the restaking part comes in, right? So the restaking is, okay, I've got this problem that I'm trying to solve. Batch auction is my solution. In order to do that, in theory, you could just decide to be a chain or a smart contract or something like that. But really, what we need here is this quorum of auctioneers. Just for the audience's enlightenment, can you just describe a little bit about? I mean, don't reveal any state secrets here, but like a little bit about how you actually select that quorum, and then what are these these auction participants? What are they doing or opting into?
Yeah. Focusing on the restaking side, the core really is to run this auction. It's a batch auction, but at the same time a dual auction where you have an initial auction for the arbitrage and then a batch auction for the rest of the user orders. But in terms of how we're selecting the quorum, there's effectively going to be a limited capacity in terms of how many validators we're willing to accept, because we don't need thousands and thousands of validators, because the state that we're underlying operating on is on Ethereum or any other chain that we might deploy to. The operators, really, their main responsibility is to ensure that the auction happens as smoothly and as efficiently as possible, so we can form the maximally profitable batch for the LP, and we can maximize the amount of volume that we're clearing against the AMM liquidity, on top of that, against the various like off-chain liquidity that might be provided in our off-chain order book. So what they're doing, basically TLDR, is you're receiving user orders, you're propagating them around. Various nodes will relay them around. The proposer will be randomly selected. Each validator will send in their current view of the network, which is the best arbitrage that is bidding the most value back to the LP, and all user orders that are valid that they've received. And then the leader will merge all of these different views into the globally optimal view and then submit that on chain. And we don't do a immediate verification of the quorum certificate, if you will. Rather, it's an optimistic process where we verify that the leader is actually the leader of our consensus at that round. They get to execute, and then we can verify things after the fact to ensure that there was no malicious manipulation from that proposer within our round of consensus.
I'm curious, was there any point in kind of the Sorella journey where you guys were planning on having maybe your own chain, right, that had no affiliation with Eigen, maybe had no affiliation even with the ETH token? And at what point did you kind of realize, actually, wait, if we need our own quorum, Eigen Layer is now offering, a way to access like a portion, right, of ETH consensus, which is really all we need. This actually could, gives us like the basics of what we need, but it also could maybe make the product better because these operators are running full nodes of Ethereum already. Is that a fair way to look at the journey?
In the very beginning, our initial intuition was actually to use LP tokens. So it was to use the very collateral that is providing liquidity within the AMM to secure the auction that is maximizing their profit in the first place, which I still, to some extent, think is like the maximally efficient way to do things and aligns incentives in the cleanest way. The problem with that is that you now enter an accounting problem, basically, in terms of your consensus. You have all of these different LPs. They have varying concentrated positions that represent different balances. They're operating on different pools. And you now have to account for the fluctuation in price and value of each of these assets. So for simplicity's sake, really, we initially thought, okay, it's best to go with Ethereum in the beginning. But there's also the big boost in economic security that Eigen Layer provides, insofar as there's such an abundance of restaked capital today that we initially did not consider the optimistic model. We thought that requiring such a significant stake on a per validator basis would basically be a limiting factor in bootstrapping our network. But now that we see that there's such a large amount of capital available, we realize that we can push these minimum stake requirements far higher and operate in this optimistic scenario, which provides like overall better quality of execution for the users because you're minimizing gas costs at each batch. So every single time a batch is cleared and executed on chain, you're avoiding these costly signature verifications, basically.
Got it. And I want to transition Muto over to you here in a second, but I just want to like underline that for listeners. And Ludwig, maybe ask you to just say a little bit more, because what we're trying to draw out here is the additional features that you can get and from a restaking type setup. And I would love to get a sense from your perspective of why were you initially concerned about having some amount of security, like some amount of procured security for each one of these validators that participates in your quorum, and what do you get as each one of those validators have an additional amount of security? Like, are there additional tasks that they can perform? Is there some amount of scale in the auction that gets unlocked? Like, what do you get for having more restake security?
In terms of more restake security for us, it really is bottom line important on the per validator basis, and because any of them can be a leader within around a consensus, and the risk there for us is the theft of this LVR that is bid back to the user. So if you do not have a minimum stake requirement that is larger than the biggest arbitrage that we've seen in the history of Ethereum, they can and are almost incentivized to just steal that for themselves. So unlocking that larger pool and the higher requirements enables you to open up the trust that you're allocating to each leader, so that you can wait after the fact to verify in case something goes wrong, instead of having to verify everything all the time. But apart from that, in terms of pooled security as a primitive, here it benefits from it in the sense of lower cost of capital, but we still very much need attributable security. And I know Sriram has been talking about this a lot, but if we have significant pooled liquidity, but within, say, an epoch, all of it gets slashed, and you have a single validator that gets slashed, and then there's a chain reaction. If we're not able to claw back that amount of liquidity and refund the users that lost, it doesn't put us in a better position, really.
Makes a ton of sense. Muto, let's transition over to you here. Can you just give kind of same way that we phrased the question to Ludwig? Like, can you just give us an understanding of what Ethos is, and then what was the core problem that you were interested in solving?
Yeah. So I think the one-liner is essentially Ethos is a marketplace for commitments, all backed by restaked ETH. And I think when we kind of started about this, we really were focused on what Eigen Layer unlocks, which you've gone into quite a lot of detail on. And I think for me, the core to it is essentially programmatic access to security as well as decentralization. And I think one of the core things and the reason why we started Ethos was essentially recognizing that this was possible through Eigen Layer, but it wasn't actually as programmable as it needed to be. And I think for us in particular, what we were focused on and mostly interested in is kind of seeing this delineation between different types of AVSs. So you have stateless AVSs, and then you have stateful AVSs. And I think in particular for us, what we were focused on was this idea of stateful AVSs, and particularly this idea of having ecosystems that are still able to kind of have their own flair on perhaps their own execution environment, their own VM, or having their own kind of extensions to what is done on chain, what their validators are doing for them, but still having that be backed by a uniform economic security level. And so for us, generally being ETH aligned, we believe ETH is the best asset, the best credibly neutral asset. Restaked ETH is essentially one way to get that cheaper and, again, more programmatic. And so that's essentially where Ethos was kind of grown, was essentially this mechanism to build these chains backed by this primitive. And then what we've shifted towards and are focusing more on is this idea of what are these actual extensions that you can do, and how can we actually take advantage of this restaked ETH in order to effectively extend what's possible in crypto economic systems today. And so I think the most prescient example of that right now is to build something akin to a commitment layer, where you're able to take your validators that are running your chain, or really just your AVS, but in our case, a chain, and then have those validators compute or otherwise commit to doing some other work, and then commit to those on chain and have them be arbitrated. And so this is where there's a whole system of things that we can get into in terms of how Eigen Layer makes this secure using things like StakeSure. But essentially what this allows you to do is build things like coprocessors that can then readily commit on chain, and then have challenge periods that are all effectively coordinated through Eigen Layer. And Ethos is essentially the mechanism to make that happen. And in particular, we're building the first chain that will essentially enable that functionality in a more general sense.
And I think what you hit on is there's kind of the vanilla value prop of restaking, which is the ability to stand up chains that are faster, like in a cheaper, faster way. And then there's this much more interesting sort of design space of more important unlocks, I think, that you're going after, really around interop. And I would love if you could just maybe speak a little bit more to what this actually means, in terms of like a generalized platform for commitments for any sort of like stateful service, right? So this doesn't necessarily mean it has to be like, an Ethos powered like chain. This could be just one part of, let's say, like a sequencer, right? Or like,
Yeah, so I think in general, if you want better interop, there's a lot of different ways to do it. You've probably gone down the rabbit hole in terms of like shared sequencers and other kind of designs. But I think for us, what we've kind of boiled it down to is becoming most important is this idea of being able to make a commitment and then having some credibility around it such that searchers or just interop partners can kind of rely on that commitment. And so for us, the important components of what makes a commitment credible is one is like having enough bond or otherwise having enough economic security behind it. And so that's where Eigen Layer kind of comes in to solve that. And then the second part is needing essentially, particularly for the interop use case, you need a neutral space by which these commitments can be arbitrated. And I think the example that's interesting to talk through is like in the context of perhaps like Cosmos chains, you can have two different Cosmos chains. They can each have their validator sets, maybe be running, if we forget Eigen Layer, they just have their own tokens. They each make bonds in their own tokens and they make a commitment. The issue that you run into is that as soon as Ludwig kind of mentioned earlier in like the LVR case, as soon as in the interop case that it's more valuable to dissent, you will have essentially chains reorg or otherwise socially get around their commitment. And so that's where I think having a credibly neutral asset such as ETH, and then having a credible neutral layer where these commitments can be made, and these commitments can then be proven against on Eigen Layer is quite important. I think that last part is also more of a like implementation detail, but also important, which is essentially if you're making all these commitments, you need to have some way to verify the commitment, and you need to basically say like this person said or this proposer said that they were going to include my transaction in the next block. I want to slash them because they didn't. You then need to prove the state of that chain on particularly on ETH-L1. And I think there are just good arguments around returns to scale for having a single place where that is happening. And that's essentially what the Ethos chain is coming up to be, is that mechanism where you can prove essentially the state of many chains onto one chain and then prove that state onto Eigen Layer and do the slashing that way. There's also various things around like returns to scale for bringing in a bunch of pooled security. I know Sriram has talked about quite a lot of that in the past. Attributable security is a whole other can of worms we can also get into.
Yeah, I actually kind of want to get into that because I feel like both of you touched on that I think, the full value prop doesn't kind of come through until you get something like StakeSure, right? Which is, again, for the audience, the difference between pooled security and StakeSure is really it's two things. It's one, this idea of like isolation, right? So having some sort of reserved capital just for one project. And then the second piece is what happens when there's slashing, right? And with attributable security, the slashed assets are actually redistributed to harmed users. And that, gives you like, it's maybe it's an underrated, like, but very, very powerful tool. And so, yeah, I think for both of you, you guys see this as like the core part of the longer term design. And maybe just to explain to the audience, like why this piece is so important for your products would be super helpful.
Yeah. Without it, we're just running like a bunch of validators with no underlying backing behind them. And we're playing the decentralization theater, really. Like if there is no bond to be slashed, and if there is no ability to claw back the funds that were lost, great, we've burned their assets, so we've disincentivized, this malicious activity, but your users are still at a loss at the end of the day. So it doesn't seem like really that great of a solution, in my eyes at least. In terms of attributable security, The specific case that I've always been very concerned, and I've talked at length with Kaido and the Eigen Layer team in general about, is this idea of epoch-based slashing. And this was one of the initial designs that they came up with last year and that they decided to scrap. And I think it's a great thing that they took the time to think about a better way of doing it. Basically, the problem here is you have individual epochs where you're accounting stake based on these epochs. And so if a slash event happens at epoch 1, the update in the balance will only happen and take effect in epoch 2. But from my initial intuition, if I'm operating for an AVS in epoch 1 and I get slashed, and that it represents a significant portion of my balance, or my entire financial incentive is to look at any other AVS that I might be also operating and try and extract as much value as possible, because I know that the value of my bond is severely discounted now. And so I would always try and extract as much as possible and try and be as malicious as possible everywhere. But now you have a scenario where those other AVSs aren't aware of this. They aren't aware of this slash update that took effect in this current epoch. And you find yourself in a situation where 3 AVSs or 10 AVSs are all slashing at the same time. And they now have to spread the pie of that end stake, which will likely not represent sufficient stake to actually redistribute that value and make your users whole. And that is, I think, a very large problem, one of the toughest problems in designing the system correctly. And I think attributable security provides an elegant solution towards that.
Yeah, just to jump on that as well, I think one of the core frameworks that I've been thinking about with regards to attributable security is essentially the difference between what is an optimistic model versus a crypto economic model. I think lately we've been seeing this permeate a bit more in the space, where you have ZK, optimistic, and crypto economic as the three, and maybe trusted hardware is a dark horse in there as well. And I think for particularly the way that we're thinking about optimistic versus crypto economic, I think it primarily comes down to a UX perspective, where if you take an example of a coprocessor, what you can do in an optimistic scenario, this is kind of how rollups work today, is you can basically do some compute, commit to it on chain, and then you have a fraud-proof window whereby anyone can challenge that. And I think part of the reckoning there is essentially you need to have some amount of bond to prevent Sybil there, but it's not enough of a bond, as Ludwig mentioned earlier. It's not enough of a bond to make it actually disincentivizing anyone from committing fraud necessarily. And there's also not a lot of reason to do so because there's a long fraud window. But I think if you flip that and you go into a crypto economic model, particularly with something like attributable security, you can get kind of the best of both worlds, where you can put up a much larger bond, which will allow you to essentially circumvent the fraud-proof window. And then particularly, this is where StakeSure comes in particular, is if you can model the paper goes through all the specifics here on the cost of the cost of an attack versus the profit of corruption. If you can model out what the profit of corruption of your system is, you can essentially buy enough insurance such that it is in everyone's best interest to take the result of, say, the coprocessor as instantly as it's posted, and then you can rely on the insurance mechanism to make any users whole on the back end. And so I think that just unlocks a whole different set of interesting UX parameters and UX kind of styles going forward. And so that's in particular what we're building towards. I think there's a lot of open questions on how exactly this works out, but I think the UX unlock will be pretty massive there.
Hey everyone, wanted to give a big shout out to today's title sponsor, Sei. Now, I want to talk to you guys a little bit about why I think Sei is cool from a design standpoint, a big problem that it solves for ETH devs out there, and then some cool stuff that Sei has coming up. The reason I like Sei from an architecture perspective is, again, it's a very fast blockchain, parallelization, all of that stuff, but Sei has essentially been custom building block space, which is for consumer apps and dexes. Now, they have some very cool features which enable that. So twin turbo consensus, optimistic parallelization, Sei DB, all of this stuff allows you to reduce the time to finality, make for very, very fast transactions. So if you're building a consumer app or a DEX, this is basically the blockchain for you. If you've been building in the EVM, you love the EVM, but there are some restrictions about it that don't support your app. So maybe you can't do fast enough transactions, or it's not parallelized, whatever it is, you can now take all of that stuff that you built. You don't have to start from scratch, and you can build it on Sei. Now, recently they've launched V2, but also public DevNet. So the way that you can follow that and keep up to date is go and follow Sei Network on Twitter. All right. Thanks, guys. Hey, everyone. This episode is brought to you by Kinto, the safety-first L2 with user-owned KYC and native account abstraction that is accelerating the transition to the on-chain financial system. Now, we've been talking about Larry Fink on this program and how he's been shouting the good word about tokenization to all of his buddies on Wall Street. this is happening. And the very cool part about Kinto is that they are built to accept a whole bunch of assets and a whole bunch of users from the traditional financial system, which current L2s have done an okay job, but there's a lot of room for improvement for onboarding. So it features very nice things like user-owned KYC and native account abstraction that solve some of the biggest blockers around mainstream adoption, namely security and user experience. You can become a founding member at engine.kinto.xyz. If you believe in this on-chain financial system, join Kinto's launch program and thank me later. Cheers, guys. And the link, bottom of this episode. Click it now. Guys, I want to change tacks here a little bit and ask you guys about, from a branding perspective, actually, sort of a squishier cultural alignment sort of perspective. And something that we've talked about a little bit so far in the season, and something that you hear quite a bit about is, this is especially from, I think, people that are more questioning the ultimate value proposition of restaking and whether or not economic security is a meme or not. And they sort of say, well, one of the big advantages of being an AVS is you're sort of buying into a narrative, right? And part of this is you hear there was some element of truth to this, right? When with ETH rollups, right? Where, oh, we're not a failed L1, we're an ETH rollup. And I actually think it sort of worked for them for the most part, because an enormous amount of attention and eyeballs and VC funding and all that stuff was going into anything that calls themselves an L2 or a rollup. And I think the pretty phenomenal success of Eigen Layer, which is sitting at over $20 billion in TVL. We're doing a whole podcast series on it. There's a ton of attention around this ecosystem. And I think there probably are, some teams out there that want to like leverage that or plug into that. And so I'd love to get your guys' perspective as builders of AVSs of like how much validity there is to that narrative. And then I've got a couple of follow-up questions after that.
Yeah, I'd be happy to talk about this briefly, just because we actually went through this exact kind of narrative like roller coaster. And so I think in particular, the way I think about it right now is most particularly like there are a set of projects that do value this kind of like narrative alignment. And I think from Eigenlayer's perspective, selling Eigenlayer alignment to them is valuable. However, I do think you do have to basically like reckon on like who are you working with here. I do think there is like somewhat of a negative selection bias in these kinds of mechanisms, because you essentially get towards this like mercenary culture where it's like, oh, I'm just going to whomever gives me the best narrative at any particular time. And so especially in the current climate where we have things like alternative restaking mechanisms starting to crop up, as well as just like generally different forms of shared security. So if you look at Babylon and Cosmos providing Bitcoin security, there's initiatives around like restaked Solana, all these different things. And then, of course, all of Celestia and what's going on there. I think you just, if you focus too much on that like narrative drive from like an ecosystem perspective, you end up in this mercenary culture where you'll just have, oh, I'm Eigenlayer aligned 1 month, and then next month I'm a different ecosystem aligned. And practically one of the concerns right now for Eigenlayer that I'm happy to go into as well is like the switching costs actually aren't incredibly high. And so if you wanted to go from one shared security provider to another, it's not actually the end of the world. And so you can do it. And then I guess just to touch briefly and also to hand the mic over on an Ethos's perspective, I think primarily right now, like Eigenlayer has become like a very strong partner for, I think, a lot of AVS teams on just becoming like a thoughtful design partner. And so I think from our perspective, it has been somewhat beneficial to be tightly aligned with them. However, I think it's pretty important to build your own brand and be somewhat independent, as well as also just pushing the state yourself, such that I think in Ethos's future, if it ever made sense that we would be like agnostic to restaking provider, or if we moved off of Eigenlayer onto another restaking provider because of any particular value props, like that's totally reasonable. I just think right now, like Eigenlayer actually has like a really strong head start, and then also has like the best feature set.
Yeah, just to hop on what Muto touched on. I think this idea of like narrative hopping and suddenly shifting towards building an AVS has like become quite an apparent problem. I think in the long run, so long as Eigenlayer is able to manage who they're effectively attributing the spotlight towards, that will be sufficient to protect the brand and ensure that this is a permissionless system, anyone can build on top of it. Naturally, people that are operating a grift will come. We've seen this with Ethereum. We've seen this with any permissionless system, especially when the financial incentives are so high. But at the end of the day, like as a protocol, as a project in general, you're not an AVS. You're using Eigenlayer's back-end system, right? You are benefiting from the tools that they have created and the brand that they have effectively propelled towards attracting a very large amount of economic security, a huge amount of staked ETH. And that is incredibly important and beneficial. But your underlying success will depend on your ability to do something useful with that stake. And so end of the day, for a lot of these projects that seem to be hopping over towards this narrative, and that you can't really distinct a clear reason to why they're actually now an AVS and why there is like this economic security that has to happen to some extent. I'm not necessarily that confident that will like turn out really positively for them. I think for fundraising, it's probably a different story, but in general, like your end success, your be all end all as a company is to produce useful and compelling products for your users. And the entire economic security side of things should just be there to facilitate that and just be there to ensure that you have this larger freedom of operation to be able to push some level of compute off chain so you can do fancier things in this on-chain world. Apart from that, I don't think people should be leaning that heavily into it.
Yeah, it's kind of funny. We were joking about this with Shriram in the first episode of this season. It would be like if one of the games on your phone was advertising as like, oh, we're an iOS based. It's like, who cares? That's so irrelevant to what you're describing. But let me ask you guys this. I could see on the one hand right now where we could argue about whether or not it's really sexy to call yourself an AVS. Clearly, there are, at least in the short term, some sort of narrative benefits there. I do wonder, though, on a longer term time horizon, if that could actually be something that maybe like a larger and more established project wouldn't actually want. So, for instance, they might actually want, from a branding perspective, I don't want to be known as an AVS, right? I already have this brand name and audience and user base, etc. I think that Eigen Layer is the correct backend for my application, but I don't want to go around calling myself an AVS. And so I'm wondering if you guys think that branding might cut both ways, and whether or not there's room for maybe one of these new restaking platforms to position themselves differently.
Yeah, just to touch on that, I guess briefly, I think one of the ideas I think through on this is that it can be seen as somewhat of like a detriment to call yourself an AVS. I think the most kind of prescient example I think of for this is like this concept of an L1 premium. Like we've had this idea of like, oh, some chains don't want to be rollups because they want to be their own L1 because it attracts some premium by being an L1. Is that true or not? It's actually like an open question for me. I think it's true for like the barbell, like the top few chains, and then it's like extremely untrue for the rest of them. But who knows? And so I think that part of narrative thing, it's just very hard to like disprove that like being an AVS doesn't detract value. And so I do think there's that is some component. But I think to that end, like there's nothing telling any of these projects, or like even speaking for ourselves here for Ethos, to call ourselves like an AVS. In fact, in most of like our discussions, like we really don't call ourselves an AVS. I think there is an AVS that underlines what we do, and then there's everything else that we do. And I think that's the framework that we think through. I'm not like wholly convinced that any particular competitor is going to be able to like eat any of Eigen Layer's lunch by like just not calling things AVSs and calling it like something else. Like you're going to need something more than that. But I do think it's more of a reflection of like the strategy side of this. And to their credit, like I don't think Eigen Layer right now is going out of their way to say like, oh, please call yourself an AVS. Please call yourself an AVS.
Yep. I think there is one thing I want to touch on there. You mentioned the L1 premium, right? And usually that is like a staking token for your L1. And there's been some discussion of like, okay, well, what are you kind of giving up as an AVS, right? And can you have your own staking token? What role does it play? And then if you get big enough, and if you're really, really successful and your own native token is now worth, say, $10 billion, right? Do you graduate from the marketplace? Or, are there things that are those value add, like sticky services, right? That keep you on the marketplace longer term? And Ludwig, like I could, maybe point it to you. If let's say, Sorella is a massive success, right? And you have a huge market cap for your staking token, and you have a lot of liquidity, right? Which maybe opens the door back for like this LP token staking thing. are there reasons basically to keep you like on the platform, or like what are the sort of reasons that you would want to stay on the platform?
Yeah, I think this idea of like stickiness towards the marketplace is very valuable insofar as Eigen Layer is effectively creating these baseline primitives. And there is a lot of research work that has to be done in ensuring that this pooled security is spread out efficiently enough where it isn't prohibitively costly, but at the same time also guarantees the underlying security of a given chain. And then you have the concern of the implementation of that and ensuring that that entire like smart contract apparatus is extremely secure. Now you have attributable security, which is also, if not more complicated. All of those things are not easy problems, and they take a very large amount of work and a significant investment. We, like as a company, want to focus on offering the absolute best experience for our users. We want to focus on being the most performant DEX on Ethereum and on other chains. We want to provide cross-chain swaps that are hyper efficient. We want to ensure that LPs overall are getting a really good deal and are able to seamlessly provide liquidity without worrying about these various arbitrageurs that are very good at finding ways to extract capital in any form. And so that's a huge focus for us. We don't necessarily want to focus on all of these services that Eigen Layer is already specializing at and is spending an incredible amount of resources into improving every day. And so for me, like a huge part of the value prop as well is not having to concern myself with continuously trying to improve that part of the system and focusing on my core business logic. And so for me, that's an extremely valuable component of the system. And in general, touching upon the marketplace view, it's just a more efficient pricing mechanism for how much you should pay for security, because you can benchmark that on how much attributable security a competing AVS is demanding for and how much they're paying for it. Whereas if you're operating purely your own chain, that discovery mechanism in terms of emission might be a bit murkier.
Right. That makes a lot of sense. And it does feel like, one of the core value props of Eigen Layer is just being able to carve out more of your time and resources towards the core product, right? But also not having the limitations of needing to be built directly on Ethereum. So you can have your chain, right? But you don't have to spend, you can basically reallocate time towards the things that matter, which is building a great product. I am curious though, like I know, Ethos is a Tendermint chain. I'm not exactly sure with Sorella, but how much sort of like hand-holding work did you guys do with the Eigen team to like say, okay, what is the right quorum design for this for like my application? What are maybe some consensus, systems that I can grab off the shelf, or is there something, maybe that's a little bit more customized here that makes sense? So maybe like transitioning a little bit over to like, okay, great, this makes a lot of sense. Let's go with Eigen Layer. Now, what do I actually, what does the quorum design look like? Like, what is actually, what are we doing as a chain? And yeah, curious just how that journey kind of looked for both of you guys, and if that was something that the Eigen team helped a lot out with.
Yeah, I think there's a few different things to go into here. I would say, like, in terms of the actual design, particularly as you get towards like a stateful AVS, as we kind of outlined earlier, like there are actually quite a lot of considerations on like not just the quorum, which is at least in Eigen Layer terminology is like somewhat limited, but also in like the consensus model that you're running. You mentioned like we run Tendermint. I think the primary value add for us on running Tendermint for our chain is essentially like customizability, as well as like being ready more or less off the shelf to do many high performance use cases. And I think the other part is that for us, for the particular design that we're building, you have to consider like what are the important dimensions that you want to optimize for. And so I think when you're thinking this through, like there are different designs, and you see this in L1s today, where it's like some chains like Ethereum highly value having a very large and distributed validator set, whereas other chains are happy to centralize this a bit more, or at least have like more high-powered validators in smaller sets. And so I think in general, I'm somewhat more on the aligned with having smaller and more powerful validators, powering particular applications, and then building the right layers of control around them in order to make that still decentralized and still censorship resistant as well as powerful. And so from that perspective, it made sense for us to focus on Tendermint, and then as well to focus on our Quorum Design, which is again like part of this Eigen Layer construct of like where are you getting your stake from. I think for us, we've essentially taken on a more neutral standpoint, at least to start, which is essentially this idea that you would want to have kind of equal distribution of quorum weight by the amount of restaked assets in each quorum. And just or in each strategy, I guess, specifically, just to parse that a bit more, it's basically this idea that you can restake. I mean, you can restake native ETH, you can restake staked ETH, like through Lido or any of these other options. And so I think for our perspective, we're kind of happy to be somewhat distributed across there. I think for different applications, you might value different qualities here. So as an example, if you wanted to actually push for more decentralization, like it was important for your application to have many different validators, have them be geographically distributed and all these like more ETH-centric kind of qualities, you might push for having a larger percentage of your quorum come from native ETH. And I think that just generally pushes for like more support for like home stakers as well as this whole other ecosystem. But I think in general, for most of the AVSs that we've been chatting with and also like generally working around, is this idea that you would just want to kind of get your base level of security and then figure out the application on top. And I think one of the greater services that Eigen Layer can do is really just abstract like where the stake is coming from. And ideally, one of the things that I think would be useful for Eigen Layer to also introduce is some layer of observability as well as monitoring of like how centralized or otherwise is the distribution of these different strategies. Because I think it kind of comes into like the network effect or otherwise value prop of Eigen Layer is like not only is the TVL important, but also like how distributed is that TVL? Because if like just spitballing here, if there were to be like a restaking provider that came up and just had like a bunch of restaked ETH from one particular provider, like that would have very high TVL, but it wouldn't actually provide a lot of the benefits that you would otherwise value. And so that's kind of how I've been thinking about it.
On our end, we've taken like a very specific approach to designing our consensus because it's we have extremely different considerations from like regular blockchain applications. Like we don't actually hold state. We are operating to maximize the optimality of a set of inputs that are only valid within a slot, right? And so for that, it was a complete redesign. We first looked at Tendermint, and we realized there are a lot of communication steps, and the underlying schedule of consensus does not fit the needs of our application whatsoever. And we really want to ensure that we can have maximal throughput and very low latency consensus, because the amount of time that it takes us to form consensus is a direct impact on how accurately a market maker can quote, because otherwise their orders are out in the open for a longer period of time, and the risk that quote becomes stale increases. So to maximize effectively the optimality for our users, we had to go from scratch to build something that met our very specific requirements. On the side of the help with respect to Eigen Layer, it was mostly in the review stage. I've been working really a lot with Kaido, and just having someone who's knowledgeable and cares enough to review this stuff that is sometimes like tediously complicated is like a super great value add. But apart from that, we really had to do things and implement them in a completely different way.
So just out of curiosity, Ludwig, for when you were, did you wind up with something that looks like kind of a modified version of Tendermint, like hot stuff or something like that? Or did you just start from scratch and build something completely from the ground up?
So the kind of process that I like, the TLDR of how it came about was, first we have Tendermint. Okay, what can we get rid of to shave off on latency? Okay, now that we've gotten rid of this, really doesn't look like Tendermint that much anymore. Okay, now there are these specific considerations that relate to liveness. We don't actually care about this because our proposer rotation happens through the schedule of an Ethereum block, because we're operating a sidecar that is tied to an Ethereum execution client. So, okay, let's remove that as well. Okay, now we end up with something that looks even less like Tendermint, which is now basically completely different. Now, how can we modify the underlying schedule of consensus to ensure that the proposer has as much information as possible from all of the other views of the network to be able to create and merge and output this optimal solution? And And then from that, how do we ensure that we can do so in a very gas efficient way? And that's when we entered in the idea of the optimistic style of validation. But initially, the consensus itself was designed without the consideration that we were actually using Eigen Layer, and we had not realized the value of opting in to this AVS side of things with restaked ETH. And so after that did have an impact on our design, because that's the time at which we were able to say, okay, we can confidently switch from this process where we're verifying and forming a 2/3 consensus on the validity of the output to a model where, okay, the leader can now just submit directly on chain, because the stake is so much higher that if there's a $10 million bond, I don't want to say, like, never say never, right? But realistically speaking, the LVR theft will not be greater than that. And so we don't have that as a concern. And in regular operations, things are just that much more efficient.
Man, super interesting. So Ludwig, maybe we can get you to just to maybe zoom out here a second and just ask, for instance, maybe some folks in the audience might still, you sort of danced around this, and given that the latency was actually a really clear example for me to just get that talked through. But, for folks maybe who aren't as much in the weeds or just want a takeaway of, for instance, where would I use like an AVS versus something like a rollup? And actually, like today, rollups, you might look at that and say, well, that doesn't make much sense for something like what you're describing, because there's one centralized sequencer. So you can't have this sort of rotating, set of auctioneers. But there's really no reason why, in fact, like tons of companies like Espresso are working towards decentralizing sequencer sets for big rollups. And then it actually looks pretty similar to the construction that you have on, right? Big difference being these are Ethereum validators that are running a sidecar as opposed to their own separate operators. But just for listeners, like, can you just like underline kind of the 2 or 3 points, like why be an AVS here as opposed to something like a rollup that could also make sense?
I think, you can view a rollup as an AVS in the sense that today we have a very broad definition of what a rollup means, but a very very specific view of how that looks in practice, and the current like centralized sequencer model that we see. Longer term, like as regulatory concerns emerge, I think that there's going to be a lot of value in having these truly decentralized systems. And from that, you can call it an AVS, you can call it just a rollup. End of the day, it depends on if you're opting into economic security that is provided through restaked ETH. But zooming out, like technically speaking, you can really boil down an AVS to, okay, I'm interacting with this restaked security. Apart from that, like the sky's kind of the limit in what you can implement. So I'm not sure that like really is a clear answer to your question, to be honest. But for me, it's hard to specify when you use a rollup and when you use an AVS, because in my eyes, a rollup can very much be an AVS, and they very likely will become AVSs. But overall, you can see AVSs today that you could consider rollups as well. So for me, the line is far murkier than it could initially appear. And I think that it just really depends on what underlying economic security they're utilizing to secure the system. Because if they're using restaked ETH, you could call it an AVS. But the underlying operational mechanism would be effectively the same.
Right. And maybe like one easy call out is, if you think the best version of your product only requires, like, doesn't need a stateful sort of operator set, right? It's just a stateless sort of network of operators doing a job and then, communicating back to Ethereum. I think, before Eigen Layer, there was not really great options for that, right? It was like you could just have like a committee or like a multi-sig kind of, running these operators. But now you can actually get what looks a little bit like the benefits of a rollup, right? Inheriting security from a much, larger decentralized network, but also just have a stateless sort of operator set if that's going to be the best version of your product, which it sounds like for Sorella it is.
Yeah, I think, now listening to your comment here, I do realize I actually do have a bit of a clear answer for Mike's question, in the sense that when we're looking at rollups purely on the basis of, okay, this is a layer above a base chain, and we're operating with this state that is effectively interpreted through like compressed state on the base chain, you have like exactly what Miles was referring to, these other requirements for various other applications that don't need that compression of state. And they don't actually care about this idea of, oh, we have our own custom execution environment, and then we're pushing state down to Ethereum, so that in case that something goes wrong, we can interpret it or roll back state. For our example, we're not compressing down state. We're deciding what to do and how state on the base chain can change, right? So I think that's like a slight nuance where this idea of the AVS, in that context specifically, is far more beneficial, because you don't really have the same requirements, and you don't have the burden of loss of funds or various other problematics that might occur if you are a stateful chain that might operate over a base chain, if that makes sense.
Yeah, just to touch on that as well, like I very strongly agree with this idea of like if you want stateful actions, like a rollup is like a really good fit for this. And then I think the other thing to touch on is actually one of the things that Ethos is building as well is this chain using commitments, and that chain will be a rollup. And I think it's important also to call out like what is the best way to secure that rollup. I think everyone like agrees like decentralized sequencers will be coming eventually. It's just a matter of kind of when. And I think our perspective is actually that restaked ETH is actually an extremely good way to secure that centralized or decentralized sequencer. And I think it boils down to like what is the restaked ETH actually protecting here. And I think in the case of like reorg attacks or otherwise kind of inclusion malfeasance that you can do at a rollup, these are much easier to arbitrate and otherwise like connect directly with an AVS structure, rather than if you're running like a whole other chain, there's like this general mechanism where you'd want to like rely on social slashing and all these other things. I think with a rollup, because you have this mechanism where you can have forced inclusion into the L1, using something like restaked ETH to secure the decentralized sequencer set makes a lot of sense. And so that's kind of why we're pretty focused on that. And I think in general, I think it will be like the dominant model to at least bootstrap a lot of these decentralized sequencer networks. I think to your previous question, there will always be this question of like, okay, once you're bootstrapped, you want to then launch your own staking token. I think practically speaking, people like tokens, so they're probably going to continue to do that. And then I think what will eventually emerge is some sort of like dual staking mechanism where you have your native token that is perhaps dominant and can be used for perhaps even intersubjective slashing or social slashing. But then you have for most of the objective faults, which are kind of most important here, you can slash with a large basis of restaked ETH.
Awesome. Guys, wanted to get a sense, as we start to wind down here, 2 more lines of questioning for you. One is just on basically how much to pay, So Ludwig, you actually started out with something pretty interesting as maybe like a floor for each validator, which is opted into your auction as the amount that you could conceivably generate in terms of lever, one time. So maybe that's the floor. I don't know, like 10 million feels extremely safe based on what I know about lever, but so maybe that times however many auctioneers you want in the system. But I think this is a big question about like how much stake am I procure, how much restake do I need to procure overall? And then what is the appropriate mix between, I mean, frankly, today it's like Ethereum or your native token, but now Eigen, is part of that. And then eventually maybe outside of a platform like Eigen Layer, you could even get like USDC or something in the mix, which I know that there are lots of technical challenges with that and what happens in the event of a slashing condition. But frankly, one of the things that's really attractive about it is that the value of your collateral doesn't fluctuate, right? And so that was like a whole big thing. But like, how have you thought about that? Like how much to procure in terms of like metering and a level, and then which assets?
Yeah, I think it's a really hard problem, because the tooling there is not, you don't have an out of the box simulation that you can run and say, okay, how much ETH do I actually need? For us, the view was, and this is actually part of the reason why we built Brontes, which is basically an MEV tracing system that analyzes like occurrences of MEV on chain, was to actually figure out how much can be lost in the worst case scenario. How many the main question that we thought about was, okay, how many validators do we actually care about? How many do we want to have within our network? And on an individual node basis, what is the maximum theft that can occur? And from that should be the minimal stake requirement on a per validator basis. In terms of how much you pay them in emissions, I think that is really going to be a question of, okay, how high are the subsidies through Ethereum staking baseline and some form of Eigen Layer incentive? And then after that period kind of matures and the emissions go down, how much do I competitively have to pay within this marketplace to get the highest quality of operators that I need?
Yeah, to add to that, I think some of the things that we're thinking about, Ludwig kind of mentioned like the lack of tooling. I think actually this is like an interesting call out of just like there really isn't a lot of great tooling here. I think it's somewhat application specific to actually model out. Like if we're thinking about stake share, you do need to model out like what is the potential profit from corruption. So in Ludwig's case, like he's talking about MEV and how we're actually modeling that out. In our case, what we're thinking about is if you're making a commitment to say like a co-processing result, you need to basically model out what is the application value of this. And one of the core like realizations from the stake share paper is it's not the TVL of your application. It's actually this subset of basically like what is the within, to get into technical terms, like the reversion period of like what could be like reverted in order to harm users. And so doing that kind of calculation, I think will always be somewhat of an application specific task. Like you will need to outline what this looks like and you'll need to opt into the insurance part. But I think what's missing and could be generalized and maybe is an interesting project to kind of shepherd forward is this idea, even right now, if you're going to buy even just base crypto economic security from Eigen Layer, you're not saying, hey, I want $100 million worth of ETH. You're saying like, here's my inflation rate or here's my percentage that I'm willing to pay. And so there's kind of like this weird like PID kind of dynamic where it's like, I'll increase the rate that I'm willing to pay and then I'll get more security, but then that's too much. So then I'll decrease the rate, similar to like the inflation schedule for like an L1 asset. And so I think having more of like a layer of abstraction where any protocol, and this is what I think is like the really cool part of Eigen Layer and like the big unlock is that you have this programmatic access to security. Having more of like an open protocol where you can just directly say like my current TV or my current like total value at risk is X dollars and I then need to pay for that amount. That also does something you touched on, Mike, as well, as this idea of like not all of this is in ETH. Like some of this is in different assets. Some of this is denominated in a variable asset. And so doing that whole conversion, I think, will be quite tricky. And so practically the way I see this working, and this is what we're doing today, is we're just going to, I don't know if overpaying for security is the right way to say it, but we'll essentially have more restaked ETH than we strictly need just for extra security. And then there will be efficiency gains as this gets improved.
Yeah. In terms of the generalizable tooling and being able to communicate how much you need, like how much you want and how much you're willing to pay, depending on the amount of liquidity that's allocated. I think that is definitely a super important thing that Eigen Layer, I hope, but from what I hear, is focusing on. In terms of looking at various assets, as Mike touched on, that does become quite complicated. And now you have to take into consideration the available liquidity of those assets in the scenario in which there's a significant price fluctuation. So in the beginning, I think most of these AVSs are going to stick to one asset just because of the additional complexity that these other assets bring in. But longer term, I'd imagine a scenario where you're operating with a far more diverse set of assets that are secure in your chain, because the validators want different risk exposures at the end of the day on what they're holding.
I think this is like one of the most interesting sort of challenges in open design spaces in restaking right now, because we like at least now outlined like the types of securities that you maybe want, right? Between like pooled, let's say intersubjective, something that can handle intersubjective work, and then attributable, which looks honestly more like insurance, right? And then you have to, there's another big challenge of actually being able to measure how much of each kind of security you need, right? Which, like to your point, is going to be super application specific. We need like basically a lot of tools that make it easy for capital to flow like more fluidly, right, to where it's needed at any given time, hopefully like more programmatically than, calling up an LRT provider and saying like, hey, we need more. Right. And then you have to figure out how to price it, how much you should really be paying. And I'm super curious, do you think like in the end state, the AVSs will be paying more in gross dollars for attributable security, even though the amount of security, the like dollar amounts of attributable security are going to be a tiny fraction, right, of the pooled security? I guess just from talking to you guys, it does feel like, attributable is really it's the highest value kind of security. Like nobody even totally probably can't argue that like insurance is a meme, right? Like it's actually very useful. And so at the same time, isolated capital makes it really expensive, right? And so I'm curious just to hear like how you're kind of thinking AVSs will reason about the pricing side of this.
Yeah, there might be an interesting dynamic where if you're a very high quality AVS that generates a lot of revenue and yield for your stakers, that you can push for specific tranches of risk in terms of, I'm willing to accept you as a staker so long as you have restaked with these other protocols that I deem safe enough, where the risk of having multiple slashing events within a single epoch that put my network at risk of not being able to receive enough or have sufficient collateral where it desensitizes an attack, can happen. And in that context, you might get away with paying far less for what looks kind of equivalent to attributable security. But if that isn't the case, I definitely could see a scenario where attributable security is just that much more expensive and not even just on a dollar basis. I think we'll really just see how the market emerges there. For a long time, I viewed this market as being mostly subsidized, especially for staked ETH that is paying so much yield right now, that I don't think that AVSs are actually going to be paying that much for a while. And then when we factor in Eigen Layer incentives on top of that, I think we'll have a good time for a few years, but then things are going to start maturing and the market's going to get more efficient and things are going to get far more costly.
Yeah. To that last point, it does kind of feel like right now we're in sort of a like everyone's still dancing and like we'll see what happens when the music stops. Just because I think everyone right now is kind of on this idea where it's just like, oh, there's going to be incentives from Eigen Layer and each AVS, and like you're just going to make so much money by being part of this. And so I think it'll take a few, as you mentioned, like probably years to see how this nets out. I think the one thing I wanted to touch on in particular is this idea of like you mentioned tranches of different AVSs. I think that'll be really important to clarify and otherwise calculate like what is the correlation of risk between different AVSs. So the most prescient example I can think of is like an Oracle AVS is probably like one of the most like in need of attributable security, because you can imagine if you have an Oracle and then other AVSs are using that Oracle for other categories, you all of a sudden have like a massive red like target on your back where if you just can attack that one, you can get slashed once, but you can potentially reap like a bunch of different rewards. And so I think it just becomes, again, somewhat application specific to figure out exactly how you want to categorize the security that you want to pay for here. And then, yeah, as you mentioned, I think attributable security will always come at this premium. And frankly, I think it kind of depends on how these applications spec out. But I think for our particular use case, I think almost all of the security that we use for the commitment layer will come from attributable security because it needs to have this insurance attached to it. But you'll still have this like ideally massive pool of economic security that basically makes the whole system safe, and also is frankly like I'm going to hurt you really badly if you try and attack this kind of protection. Even if I don't insure everyone for that, I at least want you to be like significantly more hurt that you're disincentivized to do this.
Yeah, I think the Oracle one is going to be the most challenging, right? Because it's just so hard to track all the downstream sort of value at risk. But it makes a lot of sense, especially when let's say it's like a coprocessor or something like that. Something goes wrong, a coprocessor can't roll back the state of a rollup that's one of its customers, right? And so you just need something to be able to resolve. But then I do wonder about like native stake and attributable security, because if you want to redistribute the collateral, right, they have to go through like the withdrawal queue. That's probably not ideal. So that's maybe where like you match with LSTs or USDC or something a little bit, that's better tuned for that type of security. So yeah, there's a lot more to come here. But
guys, I want to wind down by just trying to think through some of the second and third order impacts of this new format of like an AVS and how that impacts applications. Historically, if we rewind back to even pre-rollups, you were very limited in terms of you basically could be a smart contract on Ethereum, right, as your sort of backend structure. Now with rollups, that opened up an entirely new design space. You also always had like full stack app chains using like the Cosmos stack, things like that. But now you've also got AVSs as well. And I would love to, maybe we could zoom, 3 or 5 years into the future. And what are folks maybe not understanding or thinking about how the introduction of this novel backend format is going to change the game? And we haven't really talked about we've talked a little bit about preconfirmations this episode, but it feels like this combination of like pre-confirmations play a story in here as well. So I'll just turn it over to you guys, and what are some of the cool second and third order implications that you don't see talked about a lot, but you guys think is interesting?
I think the world of DeFi is gonna like go through a complete revolution here, because the end of the day, you could always have a back-end system that operated in parallel to your base chain to execute any form of arbitrary logic. But securing that was really hard. Bootstrapping the security of that was really hard. Now we have like a far easier and more direct mechanism to ensuring that economic security. And as tooling gets better, things are just going to get easier and easier on that front. So may that be lending protocols, DEXs, perp DEXs, everything is going to go through this realization that, wow, I don't actually have to be as constrained in terms of computational resources as I previously was. And so I can reimagine my application basically from the ground up with this newfound power in additional computational resources to do things far, far, far more efficiently. And so I think that's going to be like a huge, huge improvement for consumers in general and for the UX and efficiency of DeFi as a whole.
Yeah, I think we're pretty strongly aligned there. I think that's something that Ethos is essentially hoping to kind of expose to more application developers is rather than needing to build out like a particular AVS for any particular kind of co-processing or otherwise commitment machine you're trying to build, you can have more of a probably somewhat constrained but more readily available mechanism where I can essentially send a transaction onto the chain that says, I want to send an asset from this person to this person if this criteria is met. And that criteria can be written in Rust, it can be written in some other code, and then that gets executed and then is enforced on chain. And I think Eigen Layer is like, or just restaked ETH is one of the core components to make that viable. And then I think the other like part of the future that I would also want to highlight is the story around interoperability. And I think for us, again, like talking my bags a little bit is like, I think it's important to have this credibly neutral asset in order to make something like this happen. And so that's why Ethos is kind of building the way that we are right now, is so that we can have for this neutral layer where you can have commitments made between different chains, all backed by the same asset. And so I think that's where, for us, part of the future is ideally that we can bring pre-confirmations not only to Ethereum, and I think we'd likely work with some partners there, but also to other chains, and have this idea where you can have commitments made on Ethereum that are then actually executed on another chain, or vice versa. You have assets held on Ethereum that are then executed on another chain, basically bringing all these different worlds together with the idea that you have this neutral commitment space backed by a neutral asset. I think that becomes really important. There's a lot of like technical things to get built there, but that's kind of where I see this going.
Maybe a bit of a controversial take here, but I think that the idea of pre-confirmations right now, they're very important for interop, but looking at the actual behavior of users on chain right now, the main really unlock that I think AVSs will actually have is less so the view of having pre-confirmations at the general protocol layer, but rather at an application specific layer. And again, talking my bags a little bit here, but basically the idea that users really just in general want to do a single action or a set of very similar actions that interact with one protocol for most cases, right? And so on that side, it's actually far easier to have this idea of pre-confirmations at the application level, where you're a DeFi protocol and you have your AVS now, and you can easily pre-confirm some swap or some loan on your off-chain state that is secured again by this restaked Ethereum, and then execute it when it's the right time to execute it, when gas costs are low or whatever you want to optimize for, right? But given that this AVS now has control of that state, you can do that very easily, and you don't really need these pre-confirmations on the base layer. Obviously, that is very limiting for interoperability. So that's a question that has to be solved. And I think that there are going to be these two emerging forces in the sense of this push for global pre-confirmations that operate across this state that is interoperable, and these more specialized and specific ones to applications themselves, and they kind of clash. But the simplicity and the application side of pre-confirmations does give them sort of a head start in terms of implementation, because it's just so much easier to implement. And if the behavior of users demonstrates that they care 99% of the time about that and about being able to pre-confirm that swap and not 7,000 transactions across the 10 different layers, which I think is most often the case, I think we'll see more of an incentive to actually solve the application side of pre-confirmations rather than the base layer challenges.
Yeah, I 100% agree. And I think actually that's like compatible with Ethos vision, where we see a lot of applications building out into their own chains. You see this like app chain thesis building out. And I think that's where we are pushing towards. There's actually a lot of customizability and technical work we're doing right now in order to make commitments for applications that are their own chain much more expressive, as well as much more like rigidly enforceable, such that you can define your protocol by the fact that I've made a commitment and I must abide by that commitment. It's like part of my protocol now. I think that's like a very interesting and exciting vision for the future. The one part I would say I maybe disagree a little bit is around like the user for this. I think I agree that it will be a user, but I guess in general, I'm like somewhat becoming an intent maxi. I think intents will essentially abstract all this and such that like, yeah, user might only be interfacing with one particular application, but the intent solver might be a much more sophisticated entity that wants to get all these different commitments or otherwise guarantees across different apps and different chains, and then use that to get the best capital efficiency or otherwise like the best guarantees.
Yeah, I think the one small difference here, that in terms of what I was referring to in terms of like these app specific protocols, is I'm referring to app specific protocols that live on a single chain, that is an interoperable chain, that is a like general purpose chain. And so we're really talking about getting the access to the underlying smart contract, and less so having this app chain specific state that kind of isolates you into your own execution environment. Because as a swapper, I don't really want to move to your own chain just because I have to execute on your DEX, except if you're giving me amazing point rewards. But apart from that, like I'd much rather have my assets on Ethereum or my L2 of preference. So I think we'll see that more in terms of, we don't want to burden ourselves with the complexity of having our own chain. We'll build on a specific chain, but we will gate the access to prevent any form of leakage and ensure that things are sequenced how we want them to be sequenced. But I do agree with you in terms of the abstraction through intent. That's definitely like a trend that we're seeing now.
Yeah, I agree. And I guess playful, like constructive feedback I would also think through is like, I guess the one thing, the case I would think of is like, if an application is giving me a strong pre-confirmation on like Ethereum state, like how do I know that they can actually like abide by that commitment? Obviously, they can give me a commitment that it will be in the next like the next block that touches this application. But what's stopping, say, some sophisticated actor from just censoring all of Ethereum or censoring that particular application? And so I do like very strongly agree with you that like application specific pre-confs are like very valuable. I just think there's also this set of other things where you don't necessarily just want a guarantee that it will be included in the application eventually. You want it like now in that application. You want it in the next block, and because you care about this broader context. And that's where I see like these things interplaying. But I do generally agree.
Gents, this has been a ton of fun. I'm sure we could have gone on for another hour and a half on pre-confirmations alone. But Muto, Ludwig, this has been great, guys. If folks want to follow you or find out more about your project or whatever that is, which I highly recommend that everyone does, what's the best way to do that for each of you?
Yeah, please. I'm on Twitter at 0xmuto. Feel free to reach out. Happy to jam on any of this.
I'm on Twitter as OX Van Beethoven, and otherwise Sorella Labs on Twitter as well.
Guys, this was a ton of fun. Miles and I enjoyed it immensely. I'm sure the audience did as well. We'll have to do it again sometime soon.
Absolutely. Thank you so much for having us.
Thanks, guys. That was awesome.
All right, partner. Excellent episode there. That was great to get Ludwig and Muto on.
Yeah, that was awesome. And glad we're doing these like wrap up, syncs again.
Yeah.
It's always kind of helpful just to reflect a little bit on what the big takeaways are. But yeah, I think those are the two of the most forward thinking, AVS builders that have been working really, really closely, with the Eigen team and building out their designs, kind of know exactly where the space is going, and know exactly how they want to use restaking to really unlock like the best version of their product in terms of Sorella, and kind of like the highest leverage, I think, approach to building a generalized platform on top of Ethereum and Ethos. So yeah, lots to get into, but I'll let you start off.
So I think I would actually direct listeners as well about what I really wanted to get out of this episode was, okay, we know there's a lot of hype around this AVS and how much is it narrative versus how much is it an actual design decision and real. We knew it was real already, but it was really helpful to just hear from the builder perspective, because so often in restaking, you're hearing from the supply side, you're hearing from the staking side, like the VC, the marketplace side, you're almost never hearing from the application builder. Many such cases in crypto, to be honest. So the first most important person that I heard talk about restaking actually was Zaki in the episode that you and I did with him and Sriram about a year ago, describing why at Sommelier he valued restaking so highly, and which was basically just the pain of not recruiting the validator set but keeping them, so lowering the cost of capital for being a staker to Sommelier was like super helpful for me to understand, like a big light bulb moment. And then one of the other light bulb moments I had was listening to Ludwig describe, obviously with something like an auction that he needs to run with Sorella, the sort of latency difference. That was like a huge just light bulb for me. So it was really great, frankly, to just hear from builders like the feature sets that why it has to be like in AVS and the unlocks that they get. Like that was huge for me.
Totally, because I think going back to that episode a while ago, we started to really understand so that the cost benefits, right? It's just cheaper, faster. You can get to market faster, and frankly, like it's also your like internal time and resources. Like can basically forget about that, right? You can just outsource security really quickly and focus on your core product. And then I think today we got a little bit more into, okay, how can you use restaking, from a feature standpoint, right? Like security is security for any chain. And it doesn't, the operator set and the capital securing it doesn't always necessarily play into the product itself. Right. But with Sorella, it was, okay, they wanted to build this product. They wanted it to live on ETH L1, right? But to date, what you're able to build directly on ETH L1 is super limited. Just the amount of like logic that can go into it, what can be done, on chain versus off chain is pretty limited. And Ludwig's point is there may not be as big of a need, to move to a rollup or something like that. If now you can have really like a lot of the core logic running off chain completely, right, in parallel with this, like, an Eigen Layer secured or just a restake secured chain, right? And everything can settle back down to ETH, similar to a rollup, but you're just, no longer forced to be a rollup.
So that was one of the most interesting parts of the discussion for me as well. Just asking Ludwig, what is the difference really from the app? Why would you build as an AVS and as a rollup? And I was a little bit surprised by how squishy the difference was in Ludwig's eyes. Like he doesn't see a really sharp distinction. I guess the big difference really has to do with how stateful the applications are. Because like really zooming out, what a rollup is like, hey, I want to build this application. This is decentralized environment, but the computing environment of Ethereum is way too expensive for me to do that. So I need to port over to this other execution and computing environment. And the way that you do that is you can compress a bunch of that state, batch it, and then submit it down to Ethereum to make it much cheaper. Right now, there's like 4844 and blobs and different pricing for those resources, but whatever. That's the way that you do that. And so there's been this huge push from members of the Ethereum community to, hey, I know you guys all liked being on Ethereum, but like let's move up, right? Like we all want the cheap gas fees, we want the nice properties of Ethereum being able to port back here, but we want it in this cheap computing environment. And he didn't really brand it like this, but Ludwig's solution is, hey, actually, what I heard him say was people actually want to be on Ethereum. Lots of people out there probably don't want to get pushed up to a layer 2. They want to just be able to swap and buy whatever meme coins they were doing before or whatever on the Ethereum environment. And he sort of found this nice way of, the auction doesn't need to be stateful. You can do all that computing off chain. And what you kind of have as a user now is like, I can have a lot of these nice properties that you get on a rollup, but I can remain on this environment of Ethereum that I prefer, which I thought was super interesting.
Because what are we seeing right now with rollups? We're getting to the point where, the biggest issue is unfragmenting liquidity, right? And all of them are really wishing that they at least had access to view Ethereum L1 state. And rollups also, are all competing for like L1 liquidity, but they can't actually access L1 liquidity, right?
Right.
So what if you can keep all the benefits of the, being like directly on Ethereum in terms of shared liquidity and having, a view into that state all the time. But instead of, doing all the heavy compute as a rollup, you do it as something that's running in parallel as a restaked sort of consensus, either a chain or just an operator set, right? So then you get kind of the benefits of, in terms of like increased, compute power and the, kind of giving superpowers to these smart contract apps, right? But you don't have to lose sort of all the benefits of shared liquidity and L1 liveness too, right? Yeah, I think that's a big unlock.
What it made me think of was, I wonder if this huge benefits for Ethereum, right? But I could also see something like this working on a chain like Solana, where frankly, like at some point, right, we're going to max out the compute on main chain, and there's going to be a push to bring some of that activity to like an off-chain computing environment. Like there have been like Drift, I think, or Drift has an L2. What is it? Yeah. Zeta, sorry. Has an L2, but it hasn't really taken off. And I wonder if part of that is because there'd be a big narrative violation for the Solana community. They've really hung their hat on, hey, we want to keep everything on one layer. But an interesting interim solution would be, hey, small subsets of Solana, validator sets, like maybe do this DEX, run this extra sidecar to, do this DEX type stuff. Like that would be, I could see that actually taking off in Solana. So and then it's kind of a best of both worlds, because then you do get all the benefits of being on one sort of layer, and you don't have to, doesn't feel as messy.
Yeah, totally. And I think that's a little bit of what Ethos is trying to do, in terms of extending all of the benefits of like of pre-comps or any sort of like in general like commitments, right, beyond just Ethereum. Because I think we talked a lot about like this idea of native restaking as
right,
these use cases as feature additions to Ethereum, right? So it's okay, there's a bunch of activity happening directly on L1. Maybe we can be more expressive about like the commitments that proposers are making directly with the apps, right, on Ethereum L1. But I think there's inevitably going to be like a lot of multi-chain activity, and not all of it is going to be settling directly back down to ETH or having a direct connection to ETH. And I think what Ethos is trying to do is basically have this like sort of very neutral platform where you can make any generalized type of commitment between two different chains, right? It could be like an Ethos powered, Cosmos chain communicating with like an Arbitrum, the Arbitrum sequencer, right? Just the Arbitrum sequencer throws a little bit of stake into Ethos, and now you can basically have something, backing those commitments. So that was interesting to me. I think, yeah, go for it.
What did you think, Miles, of that discussion at the end between Ludwig and Muto about app specific versus more global pre-confs?
Yeah, I mean, I think it's super interesting. I see like the puck definitely going towards app specific, pre-comps. I think this is similar to what we were just talking about on Solana, right? Or it's like you basically want to be able to, get a little bit more value back, right, from the L1, because from the value that your app is actually generating. So I do see that absolutely playing out, but I think that's we're just really talking about like L2 pre-comps right now for kind of like fast sequencing and basically getting past like the centralized sequencer option. But I do think it's at the end of the day, I think we're gonna get more and more into this like app specific commitments.
Yeah, I think the point of just it's been very tough to nail down a timeline on when we could expect something like pre-confirmations in the way that I think a bunch of the infra providers on ETH want that to be the case. My sense is that it's closer to years. It's definitely not months away. It's probably years. And I think the implementation timeline on app specific versus global will play a huge part of the path dependence here in terms of what ends up.
I agree with you. Yeah, and I think the other big, I guess, interesting big takeaway for me is how much both of them care about attributable security
Yeah.
and stake sure, basically insurance. Like I think it honestly seems like both projects are going to find more value, right, from stake sure than pooled security, and so I think it's people should recognize that we're in like V1 right now of what restaking can give you, and maybe V2 is like the Eigen token, or maybe that's like V1.5. But once we get to stake sure and like attributable security, it's a very different ball game. And I do think we'll see restaking providers kind of diverge a little bit there in terms of, hey, some people think this is really, really important and you should offer this within your product, and others are going to say, I think V1 is like really useful, like pooled security, maybe having it just be a little bit more isolated instead of pooled with everything gives you those benefits. And the crux is what happens when it gets slashed. Is there a way to actually redistribute the assets to harmed users? Because I think if that's part of this, question of economic security and whether economic security is a meme, like I said this on when we were recording, like I don't think anybody can argue that insurance is a meme. Like it's capital that is there to actually going to protect users, right, in case anything bad happens, instead of just slashing some random delegate's capital. But I think that's something to keep an eye on, because I think it's a big part of Eigen Layer's roadmap, obviously, and I don't think anybody else is really working on it.
Yeah. So also maybe to start to wind down here, the other part that I thought was very interesting to hear both their perspectives on was some of the moat that having your own, like some of the walls that Eigenlayer can build around its AVS ecosystem. And my sense today is that it looks more SaaS like, the moat, and from that I mean that's actually like powerful, right? Like we told you a story before a million times. We have the wrong CRM. We made the decision 5 years ago. It didn't really make sense then. It certainly doesn't make sense now. But the pain of ripping it out is too much to bear. We've got too much other stuff going on, so it's just worth it to pay a little bit of extra money and have it not be quite as good, because the disruption to the org would suck. So that's one that makes the product sticky. Where I think potentially, I don't even know how they would do the equivalent of this, but maybe they could move from like a SaaS stickiness to a potential ecosystem network effect, would be the equivalent of what Apple does with their ecosystem, where you've got your AirPods, your Mac computer, your iPhone, everything just all syncs up. It works really nicely, and trying to rip that out, any one component of the ecosystem out, it's like, it's just not worth it. I might as well just pay, and I think the question for Eigenlayer is going to be, what are those components of the ecosystem that will make my product even more stickier and graduate from this kind of SaaS to ecosystem stickiness.
Yeah, I agree with that. I think, what can you do to basically like keep these, even the most successful customers, like on the platform? I think something that it's becoming very clear, like at this point, they can actually help drive distribution for a lot of AVSs, right? It's like a lot of these AVSs are selling services to rollups. Eigen DA is going to, have a lot of rollup customers, and it's about, actually maybe probably explicitly like incentivizing an Eigen DA customer to use like 5 or 6 other AVSs, right? And maybe giving them some sort of like bundled package around that. Then the second piece is just launching first-party AVSs, right, that are complementary to your third-party AVSs. So here is a first-party AVS that gives like interop benefits between other AVSs, right? So like maybe that makes these bundled packages even stronger, or maybe this is a first-party AVS that decreases cost, right, for other AVSs. Those are the sort of things that if you move off of Eigen Layer, you no longer get those benefits, right? So if you look at, the migrating off or graduating off of Eigen Layer as something that is going to hurt your distribution, right? And it's going to maybe even result in like new costs, right? Or like lack of cost savings from some sort of complementary service that Eigen Layer provides. That's the sticky stuff, I think. So yeah, we'll see how that plays out. But
I guess we're gonna have to figure out what that is. Like one of the concrete. I guess this is something that Eigen Layer is gonna have to consider from, frankly, their own runway, capital allocation, focus sorts of decisions. But what is the amount of tooling that they want to build on their platform versus what do they want to just crop up as infrastructure around them?
exactly. Yep.
Like frankly, something to as a way for AVSs to meter out security and make those sorts of decisions. If I was EigenLayer, I mean, they've got a million things, but I would try to build that because guess what? I've got a token that I want people to use. And so what better way to write what better way to incentivize to do that than create the framework and write the rubric for how AVSs should think about it in the same way that Google and Facebook have wrote the playbook for how you should do attribution. I mean, it's genius what that's the real lock-in that Google and Facebook have.
Yeah, I totally agree. It's always challenging where it's like first party versus third party. LRTs are one example, right? Where Eigenlayer like could have built an LRT. You talked to Sriram about that. Like people thought they were, and they didn't. And could argue that Eigenlayer has, a lot more TVL now because they didn't. And yeah, I think there's, all just answering this question of how much you should pay, how much you need, and then how much you should pay is probably, like could be one of the stickiest sort of tools that they can, put out on the platform.
I can't tell how I feel about this design decision, which really pervades crypto, of being really flat and neutral and thin. There are some instances where I love it, like Lido, tons of stuff, like minimize the surface area for governance, be really thin, really neutral, align it with Ethereum. But on the other hand, leverage comes from solving complex problems. And if you just decide, I'm not going to solve any complex problems, I'm going to push all of that, you're inviting someone to take leverage over you or to have leverage over you. And so,
yep,
I don't know. General observation.
Agree. Like, Ethereum has the amount of activity it has today on L1 because of how, neutral it was, right? But I would argue, right, there's a lot of people, I'm probably in this camp, that in a perfect world, Ethereum would have put forward, an interop standard, right? Yeah. Before pushing out all the activity to rollups. Now I know that, like, in hindsight, it wasn't really realistic to do anyways, but like now we have 7 different ag layers, popping up that are all trying to solve kind of the same problem. And would have been great if there was like a enshrined, ZK ag layer that's built by Ethereum. Now, of course, like that would be a little bit opinionated because now you have to build rollups in a certain way that can leverage that, right? But that's the sort of trade-offs that I think Eigen will face too. And I think they lean more towards like being neutral and thin. And yeah, I think that leaves room for like others to counterposition potentially that are going to be a little bit more opinionated.
Yeah. All right, partner. Anything else, or we can probably.
That's it. That is it. Yeah.
Yeah.
Well, that was a lot of fun. All right.
Fun one. All right, buddy.
See you next week.
See you next week. Hey everyone, want to give a final shout out to this episode's title sponsor, Sei. Now, there are a whole bunch of really exciting reasons to be building on Sei V2 outside of just parallelization. I want you to head over to sei.io to looking into building on their public DevNet. Again, click the link at the bottom of this episode and head over to sei.io to start building something today.